All right, what is up, everyone? We are live. I'm gonna be listening to music as kind of the normal thing goes with these backtesting streams. Should be kind of chill, but yeah, I'm just gonna be backtesting. Here we go, and yeah, um, let me know how you guys are doing. Let me know how things are, and yeah, it's time to lock in. So yeah, I'm gonna be listening to music. Here we go. Oh no. I can't have it play. No, 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 no. Oh no. Hopefully I don't get copyrighted. Oh no. I hope I don't get copyrighted, bro. I was trying to play it in my AirPods and it wasn't. I don't think I'll get copyrighted. I think it's fine. What the heck? Okay, come on. Load. There we go. So, yeah, I'll start looking at price action. So, wow. There's a lot to talk about today. One thing specifically, doing good, took a few scalps in my options up 70. Yo! Well done, Snowman. Well done. This is why you just keep showing up. It's exactly why you just keep showing up. And I'm not gonna lie. It's not easy, right? It's not. It's so not easy. I hate losing. I mean, I absolutely hate losing. Every time I lose, I get so sad. And it's like, I gotta work on it, right? I'm not perfect. I gotta work on not getting sad because losing's a part of trading and I'm never gonna not lose. But I do, honestly, yeah. It's hard. It's hard to keep showing up. Like yesterday, I didn't show up to back test, and it's like, it's hard, man. But I'm impressed, Snowman. It's well done, bro. Well done. But yeah, I'm gonna be reviewing price action. I kind of already had a little bit of an idea of what happened today, um, and it's really actually an interesting lesson. First of all, higher time frame. Why did the higher time frame create this narrative that we could go lower? Well, we got daily CRT, and this is the good type of CRT. This is the one that like you want to trade. It's got a good close up, a good sweep, and a good close back within the range. That's honestly probably why we did not go higher today, was because of this daily CRT. If I'm being honest, this is just the good type of CRT, like especially because you can see we're pushing into this daily rejection block. I mean, smart money, they see this daily CRT and it's like it's just not worth it to if they are taking a trade, or no, if they were considering think about it, they're looking for any reason to not take their trade. They see this daily CRT, it's like, okay, that's reason enough for me not to take a long. They're looking for any reason not to take a trade. I also think they de-risking before CPI news Friday. Exactly. But like, think about it. If I'm managing $1 million portfolio, why would I long against a daily CRT in premium? Right? Why would I? If I'm managing millions of dollars, if I'm managing $1 million, why would I long against a daily CRT in premium? Why would I ever do that? Right? You have to ask yourself, if you were a multi-million-dollar money manager, how would you think about what happened today? Right? Let's actually make a note of this. it's just not worth it for them, right? Does it make sense? They were looking for longs within this candle and this candle. Now we're back in premium. It's just not worth it. So that's the first thing, first item of business. And I kind of mapped this out a little bit. I was backtesting a little bit prior to this. Is it really... Okay, my clock is so wrong right now. My clock is saying it's the morning. Guys, my clock is so wrong. But guys, I've been thinking about it, unrelated to this backtesting session, but I'll get to it in a second. Let me first save this. Daily CRT into the daily rejection block. So one thing, guys, one thing I've been struggling with is after any loss, I just get so sad. And I think one of the biggest things I need to work on is being completely emotionless after loss. Just accepting that, like, part of being a good trader is doing that. And it's hard, man, but I gotta work on it. And then also just, I don't know, staying healthy, because sometimes, guys, I'm not gonna lie, I'd be lying to you guys if I said otherwise, but sometimes I don't make the most healthy decisions. And yeah, I just gotta work on being healthier in general, and I don't know, it's not easy. But I just gotta keep trying. But yeah, guys, I am listening to music, so highly recommend you guys listen to music if you guys want to. But yeah, let's just keep going. But basically what I'm saying is I gotta work on being healthier, in mental health and physical health, because I just feel like I don't. Sometimes, you lose trades, and I'm like, I should stop taking care of myself like I should. It's not good, but I gotta work on it. So, next item of business is, as you kind of know from what we've talked about, right? When you have a CRT, you want to basically take the open or close of candle 2, whichever is higher. Mark this out. And this line right here, the open or close of candle 2, this is Genesis model, right? The open or close of candle 2, whichever is higher. Your entry, you either just soup at above an old high within this, or you I don't even know. You just take a regular entry within that, right? So do you kind of see what I'm getting at, right? And one thing to know is, I believe we manipulated above the true week open, right? So look at the RR on this Genesis entry, by the way. Now I'm assuming you induce a high on the low time frame. But you can clearly see, like, this is just beautiful, right? Look at the RR on this. I don't know where you'd have your stop, but, like, probably above. Holy, right? You see why this is powerful, right? Here's the CRT high. And then here's the CRT low. And not saying I would have taken this, because it is kind of at all-time highs. It's not necessarily super obvious. It's kind of scary, if anything. But what I will say is you can see kind of why there's logic to why we dumped today. There really is logic to why we dumped today. It wasn't just, oh, hey, the market, it just sucked today. No, there was logic to why the market dumped today. And this is what I say when you got to learn. Now, it's not necessarily saying I would take this, right? Because I don't, like I was just saying, I'm not necessarily going to try and short against this V-shaped inversion. However, what I'm trying to say is there's logic to why we dump. So I guess I just did the same thing twice. Anyway, guys, I am listening to music, so listen to your own music. But yeah, we vibing. What up, Kirk? How's it going? But yeah, here's this daily CRT. And that would actually be like 10R, so. Oh, man. So, this is a Genesis model on the daily. I'm not going to mark it up like a normal trade, though. So, like I was saying, right? The way this would work is you take an old high. By the way, this doesn't count because this is still part of candle 2, right? So, candle 1. So, let's go back to the daily chart. Candle 1 is... So it's going to end at 16. So candle 1 is from here to here. So you see candle 1. Then you see the manipulation on candle 2. Whoops. So it's like anyone's saying, like, it's so silly to say, like, you can't use all concepts because it's all the market. These markets are all interconnected based off of all these different traders. So yeah, you can, right? But you can clearly see how nice this played out. So C1 right here. Then we had a manipulation. So candle 2, same deal. It's going to close right here. Let's just mark it out like this, right? So now you're kind of getting at what I'm seeing here, right? Candle 1, candle 2, and drag out the close or the open, whichever's higher. In this case, it was the open, right? And now, boom, look at that. Bang, right? And so what I was trying to get at is you can enter as an inducement of an old high. So, like this, right? Inducement. This is a really good inducement. Why is this a good inducement? Because it's an internal inducement and an external inducement. You guys see what I'm saying, right? Inducement occurred on the internal and the external. Look. And it might have been above true week open too. Ooh, this is getting good. This is getting good. You guys feel the vibes? You guys listen to your music? This is getting good. So bang, internal inducement, external inducement. Whoo! Now we're talking. You guys see this? So, internal. What a beautiful soup here. Hey guys, whenever you get sad, back test, bro, and then back test more, and then back test more, and then back test more. Because I swear, it like cures sadness because you realize, oh yeah, that's right, these markets are algorithmic. That's right. I'm gonna become profitable and I'm not gonna stop. That's right. Right. So you see how we take the opener close, whichever's higher, and then we can enter as a soup. This is an internal sweep and an external sweep, and then soup right here. You see how precise these markets are? And then where do we go? CRT low. CRT low. But as always, people are emotional, right? So like you can hit one of these trades, but then you could lose your entire portfolio if you just trade bad for a couple of weeks or days, right? And then you feel like you don't know what you're doing, and then you just gamble the rest of your portfolio and lose it all. That's why trading is so hard. Not because these markets aren't algorithmic, but because we're all human, and being human means we're gonna not make the best decisions sometimes. It's part of being human, and that's what makes trading possible. Honestly, because as long as humans are in the market, these markets are gonna, yeah, there's never going to not be liquidity, right? Even when humans aren't in the market. I mean, AIs are gonna take money from each other. It never ends. There's always gonna be liquidity. So this is a nice Genesis model at basically 2 a.m. on Wednesday. This is on the daily. I guess daily paired with the 1 hour is what it was. Basically, we're taking this as a soup. Alright. So, let's kind of clear this up, right? You kind of get the idea. Next, right? Let's figure out on the lower time frame what actually happened. So we know, so that's the higher time frame context, right? We had CRT into this daily rejection block. So smart money is already very careful to long. Even though we're kind of bullish, like we have the bullish SMT, smart money's careful because it knows the CRT's there. Well, what happens, right? We have high resistant liquidity all through here. High resistant. And then what? Then we had an external gap. So first let me mark this out as high resistant. By the way, guys, I'm listening to music. I highly recommend listening to music because it just, I don't know, it makes the vibes better. And I would listen to music, or I would play it out loud. You guys know that, but I literally can't because I'll get copyrighted, so. So yeah, we had a nice high resistant liquidity here. And then what? Where was the entry I took? Yeah, it was right here. So, what's the issue? What's the issue with the trade I took? You can see we had this high resistant liquidity curve, and we push up against an external gap. And yes, I'm going to merge these two together, but even if you didn't merge these two together, we still did not inverse this external gap. This is what Dodgy preaches, right? You got to pay attention to these external gaps. So, external gap here. So even though we inverse this internal one, boom, we have this external gap. I thought we would break through this, but clearly you can see this was obviously high resistant. And so this is something you got to be careful of, is when the market has not, like, if I knew about the daily CRT, honestly, guys, I think I would have been a little bit more cautious to, yeah, I'd be a little bit more cautious, let's just say that, to take this long, because, you know, the market could have stayed high resistant like it did. So we have this external gap. By the way, another observation that I'm just now realizing. What is really powerful, as I always say, what's really powerful in high resistant conditions? Propulsion blocks, right? Well, what's this? OB. You see what I'm saying? What's really powerful in high resistant liquidity conditions? Propulsion blocks. So we have OB here, and then, actually, yeah, let's go back to the 15-minute. So OB, PB. And now you see how we don't even use probably the bottom quartile. We hardly even wick into it. Right? So this is another thing I'm going to take note of. Look, OB, and then PB. And look how we hardly even use that bottom quartile, right? So first, this is the first thing I'm going to say is, once again, as always, propulsion blocks in high resistant liquidity conditions, they're going to be very, very strong, right? So OB, here we'll just mark it out like this. So OB, see how it takes liquidity? Yo, what up, Gary? So yeah, this is I'm listening to music. Highly recommend listening to music. Just vibing with me. We're looking at what happened today in the market. I kind of went over the higher time frame first. First things first, on the higher time frame, we had a really obvious daily CRT, and if you think about it from a like large money manager perspective, like if you're $1 million money manager, that already makes it higher risk to long. That's in my opinion, that's a big reason for why longs didn't work, because smart money's looking, if you're managing $1 million portfolio, you're looking for any reason not to take your trade. You see that daily CRT and you're like, okay, we're in premium. Is it really worth it? Is it really worth it? So in my opinion, that's why the market stayed high resistant today. And as I like to say, propulsion blocks in high resistant liquidity conditions, very, very strong. And you can see how we don't even use this first quartile of this. Right? We hardly use this first quartile. So, OB, boom, we took liquidity here. PB, pushing into the OB, right? OB, PB, high resistant liquidity. Now we tap into it a third time. By the way, I think we took 7:30 here. Did we take midnight too? We got so close. Man, if we took midnight, that would have been a chef's kiss. But you can see that smart money just really wanted to make sure they got in. But yeah, we were definitely above true session open and also true, what's it called? The true 90-minute open. You can see how the manipulation occurred right there. Alright, OB, boom, PB, boom. First quartile of that PB right here. We hardly We hardly pushed through. Hey, what up, Javier? You're not first, bro. But yeah, we locked in. As I said, as I always say, I'm listening to music, guys. So just vibing, just looking at price action, and yeah, highly recommend you guys listen to music too. Just kind of vibe with me, and yeah, let's keep going. I'm actually gonna switch the song. But yeah, I would play music, but I literally can't. I'm gonna get copyrighted. Part of me just wants to experiment with it and be like, what if I did? But I'm not going to. Okay. So basically, we talked, Javier, since you're just now getting here, we talked about on the higher time frame, we had a daily CRT to the downside in premium. And from a think about it, if you're managing multi-million-dollar portfolio, you kind of see that, and it honestly, what you jamming to? I was listening to Kid Leroy. Now I'm listening to Beach House. But yeah, what I was saying is, oh man, I'm losing my train of thought. Oh yeah, if you're managing multi-million-dollar portfolio, you're looking for any reason not to take your trade. You see the fact that one, we have a daily CRT in premium, or daily CRT, and then two, you see that we're in premium. It's like you're managing millions of dollars. You're looking for any reason not to take your longs. You're very hesitant. You really want to see this external gap get inverse, which was on the lower time frame, which I'll show later, and we don't. And so you're like, okay, this could stay high resistant. Bang, it does. So that's kind of what we looked at on the higher time frame. So yeah, 15-minute OB. $15-minute PB. All right, let's screenshot this, right? And you guys see why this propulsion block works so well. We hardly even use the first quartile of it. And then look at that propulsion block doing its job, right? So yeah, 15-minute propulsion block in high resistant liquidity conditions, doing its job right. Bruh. So, as you guys know, my Dynamis model, you look for a change in state out of propulsion block. So we just go down lower time frame. Oh, would you look at that? That's sick, bro. Liquidity sweep. See, now, all of a sudden, it's like, wow, how precise could this even be? This is crazy, right? Crazy precise. Guys, why are we still complaining? Like, why are we complaining when these markets providing opportunities like this? We just got to lock in. You know what I'm saying? This is my Dynamis model. 15-minute propulsion block. Bearish change in state of delivery right here on the 1 minute. So, let's recap. High resistant liquidity, 15-minute OB, 15-minute PB, first quartile of the PB tapped. Oops. So now we drop down to the lower time frame, find liquidity sweep, change in state of delivery. We retest that, and we put stop at the high, and boom! Would you look at that? Now we're cooking up a what? Now we could target 8 projections. 1, 2, 3, 4, 5, 6, 7, 8. And there you go. That's the Dynamis model for you. Crazy, bro. Is that not just precise as you can get? Just because to show if you had the right buys today, you would have cooked. Objectively, you would have cooked. Now, is this easy to see? No, it's not. It's not easy to see. Right? I wish I could put this box into quarters, but I can't, so I gotta go like this. So this would be very, very nice. Just seeing this first quartile tap the propulsion block, very, very nice as a confluence to short. You see what I'm saying? Because remember, that's what you want to see with propulsion blocks. You want to see the propulsion block, that very top of it, like trickled into, and then explosion off of it. You don't really want to see the market go past CE of a propulsion block. You want to see it push into that first quartile, the top of it, maybe into that second quartile, but then boom, right? It's going to explode out of that propulsion block. You don't want to see anything past that. And then you can see we go 8 projections down. This is my Dynamis model, right? 1, 2, 3, 4, 5, 6, 7, 8. And you can't objectively, this is a very violent move lower. You cannot argue that this behavior in markets is occurring, right? We have a propulsion block. What happens next? Explosiveness. It's my Dynamis model, guys. I have a video that's going to come out on my Dynamis model fairly soon. I don't know when, but once I edit it. But yeah, basically this is how you trade propulsion blocks. You look for high probability one in high resistant liquidity conditions. So this is a OB. We talked about this. This is an OB. This is a PB. We're in high resistant liquidity. Now you look for line time from change in state off the PB. You could take that on the close or the retest. I enter on the retest. You could even wait for the next one, and then that would be in 2022 model. And this is why I'm never giving up, because guess what? I could lose 24 times in a row. No, I could lose 20 times in a row. And then I hit, let's say I had a huge green day where I took 3 of these kinds of trades and I hit all 3. I'm up 4R. I know I have the potential on a day where I just cook. On a day where I just cook and I'm totally in tune with the market, I could probably hit 2 of these, right? If I was perfect, right? There's probably another one here. And so it's just a matter of like, okay, am I gonna lock in or what? Right? I'm not afraid of losses. I'm not scared of losses. I know I'm gonna lose. It's just part of the process. I'm gonna lose. But if I keep going and keep learning, I'm gonna make it. Objectively, I'm never gonna stop, right? So this is a 10 a.m. Dynamis model. 15-minute aligning with the 1 minute. So Dynamis is just flow state, but using a propulsion block. So hopefully that makes sense. All right. So once again, when you have propulsion blocks, you really want to use high resistant liquidity as a confluence for the propulsion block. Honestly, if you're not using high resistant liquidity, it's not a propulsion block. I mean, it might be, but it's not a good one. The best propulsion blocks are going to be in high resistant liquidity conditions. You see this? See how everyone else is thinking this is low resistant, but it's actually high resistant, and then we short against it. Alright, I might take a break. Yeah, guys, I really gotta work on being healthier because I know, like, you can't beat yourself up when you lose. You can't make yourself sad. You can't bring your worth down because losses don't matter. Like, losses do not matter, guys. Conceptualize it, right? Like I just said, like, you take two of these trades, you make up 16 R's. 16 days of loss. That's a whole month worth of losing straight. Take two of them, and you could be green, bro. Well, depends how. Yeah, but let's say you lost 15 days in a row. Take two of those, up 1 R. You know what I'm saying? This is the power of risk management, and it's why I'm not gonna stop, right? So you can see how nice this ended up being, right? Off the propulsion block within the first quartile, we actually got a 2022 model. It's actually very interesting. I'm very curious because if this was a Goldbach OB, that would just be like, that'd be chef's kiss, bro. No way. Bro, we were in an end dog. No wonder. We were literally in an end dog. Yeah, guys. The market is always right, guys. The market is always right. Right when I think it doesn't get better, bro. We were within an end dog. And it's like, why are we complaining, guys? We gotta lock in. There's no reason, there's no reason we can't take trades like this. It's just a matter of, it's a skill issue. It's a skill issue. It's crazy, huh? Now the question is how you see it in real time. That's what I was just getting at earlier, Gary. And here's how you do it, right? You have to basically think like in the mind of everyone else and get in the mind of, okay, everyone's anticipating this to be a low resistant liquidity day. Get in the mind of that, right? And basically what you do is you pay attention to that external gap we talked about, right? You're watching this. Here, I'm going to delete the drawings for a second. You're watching this external gap. You know we had the daily CRT to the downside. You know that we have all these things, reasons that smart money might not be fully long, right? So you're very carefully watching this external gap, because if we're truly bullish and we're going to go run this liquidity curve, we, as Dodgy says, we need to inverse this external gap. Now, personally, I thought this was going to break, which is why I took this long, but I was anticipating this external gap to break. But if I had a little bit more patience, right, you can look at this external gap and say, okay, what if it doesn't break, right? If it doesn't break, we're going to get an even better short. If this external gap doesn't break, everyone's going to be trapped long, and we could short and bank like crazy because we're conceptualizing that everyone's trying to long. If we don't, like, obviously, objectively, there's stop losses above here, right? Objectively. But there's a lot of people that will be trapped long trying to target these stop losses that have stop losses down here. So we go into the market anticipating looking at this external gap, saying, will this external gap be respected? If it's respected, we can fade everyone, right? We go into the market with the mindset of that, like, yo, we could be in high resistant liquidity conditions. Let's look at external gaps. You kind of have to go into, what I'm saying is you got to go into the market with the mindset of, like, understanding it could be high resistant, and then look at external gaps and then use propulsion blocks, and then use all three of these in confluence. Once again, OB, PB, high resistant liquidity, and external gap. You use all three of these things in confluence to take your short, and then once you do all that, it's really not. Once you get in the mind of someone else, of a regular person, and you think about what the logic is, it actually does not become that hard to take a trade like this, especially because you have the golden three for high resistant liquidity conditions, right? We have a high resistant liquidity curve, an external gap, and propulsion block. So what I'm trying to get at is it's 100% able to get caught in real time. 100%. 100% we could catch it. But you have to get into the mind of kind of like what's the narrative for the day? What are people thinking, and how can we fade it, right? We want to be going against what everyone else is thinking, right? That's kind of the idea. Okay, so anyway, the other thing I was saying is, when we see this end dog get perfectly filled, guys, right? When we see this end dog get perfectly filled off the propulsion block, I mean, you have to admit, this is some beautiful delivery. Beautiful delivery. When I see this end dog get perfectly filled like this, oh my gosh, sorry, I'm getting excited. I'm getting so excited, I forgot to play the music. So, when you see this beautiful delivery off this end dog, I mean, you can't help but say, okay, this is probably a high probability trade, right? So we have the end dog. Boom. Boom. So now we have four confluences. We have end dog. We have high resistant liquidity curve, propulsion block, 1 minute change in state. Now it's getting a little messy, but you can see how perfectly we filled this end dog. Like, imagine I could freeze time right at this instant, and I showed you all these confluences. Imagine, and you saw this trade, you would say, like, dang, bro, that's a pretty good trade, right? And so you can objectively say, yeah, this is why the market was high resistant. This is why the market went lower. It's because we had all external gap. We had a propulsion block. We had high resistant liquidity conditions. We rejected the new day opening gap. Like, guys, the market's always right. Stop complaining. Stop saying, oh, why was today so hard? Why did the market suck today? No, the market didn't suck. It was just your perspective sucked. You get what I'm saying? The market is always right. Always, always, always right. Lock in, bro. Lock in. Yeah, so end dog filled perfectly. Switching songs. Okay, might take a break. So the next, actually, no, let's talk about the next thing. So the next thing I want to say is, right, we had higher. Let's get rid of the propulsion block for a second. right? We'll keep the end dog. And we're just going to take a look at this from the perspective of that external gap. We had that 15-minute external gap overlapping with the end dog. And what occurred, right? What occurred? Well, we got 1 minute change in state out of the 15-minute for value gap. So you don't need actually that propulsion block to take a trade using flow state with this, right? You can clearly see we actually had just a regular one with this 15-minute gap. Here, let's just drag this down. Let's get rid of the sweep, actually. Whoops. Okay. So the next thing I want to say is not only was this flow state, but it was also 2022 model. Why? Actually, let's keep this liquidity sweep. We swept out the highs. Oh, I remember the other thing I was going to look at. Okay, we got to go back. There's one more thing I wanted to look at with this propulsion block trade. Because this would be the cherry on the cake. If we ended up having this be a GB OB, right? That would just be... That might blow my mind. I mean, honestly, it's getting to the point where maybe it wouldn't blow my mind because I've seen it so many times. Okay, so here's the key. Here's the key. We swept liquidity into the sweep partition. That's the key. Actually, let's pull this on a higher dealing range, actually. So that's why this OB is higher probability, because we swept liquidity into the external range demarker or delimiter or whatever it's called. Oh my gosh, no way. Yeah, so you can clearly see actually, right? This liquidity sweep swept liquidity into the external range. What is it called? The extension of the dealing range. We swept liquidity into the extension of the dealing range, meaning this is going to be a high probability change in state right here. What did I just call it? Into the extension of the dealing range, making this CSD a higher probability you see what I'm saying? Alright. So, swept into the high of the dealing range. Now this is higher probability. And also we had a 2022 gap right there. So it doesn't really matter that the CISD wasn't perfectly in the OB partition because, well, it swept liquidity into the extension. That's the key, right? Once again, it's not That's the key right there. We swept liquidity into the extension. And then, interestingly, you can see we ended up getting a fair value gap right here. Okay, let's actually talk about this, actually. This is getting really interesting now. Oh, man, I keep getting sidetracked, dude. I keep getting sidetracked because I was going to look at something else, but now I'm not. I keep getting sidetracked. Let's get rid of the end dog. We kind of already know it's there. Let's get rid of actually essentially everything. Let's get rid of this. We get that. Let's just try and make this super simple here, right? So we had high resistant liquidity. We swept liquidity. Let's go on the 3-minute. It's going to be better on the 3-minute, right? We swept liquidity into the propulsion block, into the external of the dealing range. What is this, the 243? So you see how we sweep liquidity into the external of the dealing range, into the propulsion block? Okay, now we break structure on the 3-minute. We form a 3-minute gap, and yes, I'm going to call this a gap. I don't care. I merge candles together because conceptualized gaps, that's what they are. You can merge 2 candles together to get a fair value gap, right? So boom. 3-minute fair value gap, right? Swept liquidity into the external of the dealing range on the 243 partition of the gold block. Okay. So, liquidity sweep, break of this low. And then what happens? We have equilibrium here. So we have equilibrium. We can even mark out this whole thing. We have equilibrium of this right here. And so what do you know? 2022 model, right? So liquidity sweep, break of structure, 2022 gap within the fair value gap partition. You don't even have to take that. That's the beauty of trading. I could even look for a change of state out of that. That's the beauty of trading, guys. I don't even have to take that. I could take a change of state out of it. I could take a 2022 plus if I wanted to. Honestly, guys, is there a way for me to get rid of all the other lines besides... Because I only care about the fair value gap partition. And... honestly, that's it. And the external and the high and low of the dealing range. I don't even care about equilibrium, honestly. Wait, yeah, I think there is a way. I'm gonna make this look a little cleaner, guys. Let's clean this up, actually, because it's honestly kind of annoying. It's been annoying for a while. Wait, so what line do I need? I need this one, the second one down, and the third one down. Okay. So we're actually gonna clean up my gold block indicator right now. So I don't need this. And yeah, obviously I use the rejection block partition and the order block partition sometimes, but like the point right now, like you can tell where the rejection block partition is. You can eyeball it, right? For value gap partition, that's the one thing that I can't really eyeball, honestly. Okay, let's see if that fixed it. Come on. Update. Bro, what? So why did the lines not disappear? What happens if I get rid of this? What? Oh. We just got it. that's so clean, bro. Oh, now I'm in love with Goldbach. This Goldbach indicator, bro. Oh, I just fixed the settings, bro. This is way better. Now we can make the Fervaigat partition like white or something. All of a sudden, now this is sick, bro. We can actually use this way easier. Before it was cluttered jumble. Now we actually can use this. Okay, so you starting to see this now? Why didn't it turn white? Whatever, it's not, that part's not important. We can get rid of that. Okay. So we swept out the high, we broke the low, form a fair value gap right here within that fair value gap partition, right? See how now I've cleaned this up? I only am looking at the lows and highs as a dealing range and the fair value gap. Because that, to be fair, that's all that matters, right? I don't care about the other stuff. It just makes it more complicated. I'm using what actually makes sense to me, right? So, liquidity sweep, break of this low, fair value gap partition used. Expansion, we actually expand to the opposing fair value gap. Partition. And yeah. Man, this is way better. I'm not even gonna lie, guys. I'm very happy I figured this out. This makes things way cleaner. So now do you see how the Goldbach helped us figure this out? So we can short at equilibrium above the swing high, and then target. You could target the dealing range low. Boom. That's 7R, man. 7R. I don't think anyone's complaining about 7R. Goldbach is price. Quarterly theory is time. CRT is a useful tool. CRT is nothing though. It's not price or time. But CRT is useful. But Goldbach is price. Quarterly theory is time. Alright. 2022 mall in the 3-minute. Actually, we'll just call this yeah, no, we'll just call it 2022 model. I'm done calling it like Goldbach 2022 or Enigma. I'm just gonna call it 2022. I'm done trying to make a different name for it. Honestly, it's still just the 2022 model, just within the dealing range. We're just using the dealing range as our template, right? So I need to code. I need to code a new indicator. Maybe I will do it this weekend, but I need to code an indicator which basically figures out what time it is and then puts all the true opens on the chart that are relevant for that, for what time it is. Okay, 10:18. Gary Ferguson tried to help, but sad face. Ignoring you, bro. Guys, you want to be good traders or you want to be great traders? That's the question. That's the question. Here. Nope. 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 You're trying to help me, bro. Why are you trying to help me? You have your style, I have my style. Why are you trying to help me? Like, I don't even understand why you're watching me if you're just like, if you're saying what I'm doing is wrong and you're right. That's just so, it's so pointless. All right, let's move on. Like, genuinely, I don't understand what's the point in watching someone if you're just like, yeah, what you're doing is wrong, and what I'm saying is right. Oh, look at that first percent for VALGAP backtest. We gotta talk about that. Oh my gosh. Why do I need help, bro? Why do I need help? I've gotten funded $750,000. I've gotten 3,600 payouts, bro. I don't need help, bro. Just stop trying to help me. You're just making me mad. Like, genuinely. You're like trying to tell me how to trade when I've been backtesting these markets for over 2 years, 28 months now, and I kind of know a thing or two. What do you mean you use this content for your streams and how not to trade? So look at this, right? First percent for VALGAP. The higher probability first percent for VALGAP trades are going to initially pop and then fail, break through, and then backtest. This is what high probability first percent for VALGAP trades look like, right? Bro, how else are you supposed to learn how to trade besides looking at the charts and observing and looking how you could have made money? Of course, that's the only way to learn, bro. That's crazy, bro. You see this? The high probability for VALGAP trades will bounce off of it, will fail, break through, backtest. It's just so fluid. Look how fluid this is, guys. I mean, you can't deny the fluidity of this. This is just beautiful. Beautiful, just beautiful. Guys, honestly, I might not stream anymore. This is just kind of just annoying. Like, I try and just make these streams to like help someone who wants to learn something, and it's like, I don't know. I just get basically told everything I'm doing is wrong when it's not. Just beautiful, man. Look at the flow. Look at the flow. Now let's project this out 8 standard deviations. Am I the only person that has tried to help or ask you to chart in real time for correct setup? It's easy to see moves after they happened. Obviously, how do you learn though? How else are you supposed to learn? No, you're not the only person that tries to help. There's no helping. You're just being a pain. How else are you supposed to learn how to trade? I don't block anyone. I'm just saying, I'm just saying, it's just frustrating for me. It's clean as heck, dude. It's just beautiful. Yo, what up, Medbuck? Check this out, bro. So, first presented for Value App, we were inside of a sell model. How's your week so far? I won on Tuesday, lost today. We keep moving on. Check this out, though. Look at how we backtest it. This is like the best type of first presented for Value App trade when the original one fails. And you would need to go break even at that high. That's a very important lesson about this one. So this one, if you took this one off of this change in state, you'd have to go break even here. And then you see you get break evened out. You push back down, tap the first one for value up again, and 15-second change state to the downside. So yeah, on this first strike, definitely go break even here on the body. But on this one, it just slides down. It's just like cuts right through. You just slide your order in as the stop losses are getting hit. It's just it's fallen, filled. It's just that simple, man. And that's 8R. 8R. This one trade makes up for eight days of losses. This is honestly why I'm trying to risk less when I get to the funded accounts because I want to try and hit some of these kinds of trades on the fundeds. Could you imagine hitting some of these on the fundeds, bro? Like I don't need to risk a ton, and I can make quite a bit on a funded risk, and I don't ever really have to worry about losing the funded. I love this model, bro. The first strike model that I figured out is just so beautiful, man. Okay, 10:26. First strike, 1 minute, 15 second. Yeah, beautiful. Just plays in continuation. Oh my gosh, wait, what's 10:26? No freaking way, bro. What's 10:26? What's 10:26? What time is 10:26, guys? What time is 10:26? Oh my gosh, these markets just blow me away. These markets blow me away. These markets blow me away. What's 10:26, guys? Once again, I'm getting to the point where I'm realizing 9 is the highest probability time of the 3, 6, and 9. 1 plus 2 plus 6. 9 is the highest probability one, dude. 9 is the highest probability one. And that's not even like there's no other seconds at all. It's just 10:26 perfectly. What a crazy cool, what a cool trade. All right, so I'm going to write down 10:26 in my notes. 10:26, what a beautiful time. What a beautiful time. And I think once I screenshot this, I'm going to take a break because wow, that is just really cool. That is just really, really cool. Let's screenshot this. What time? Yeah, this is at 10:26 Eastern. Oh my gosh. Okay, so just came to say hi. I got to go. Sounds good, bro. It's good to see you. You're a real one, bro. Appreciate you. Yeah, 10:26. First strike. 1 minute. Landing with the 15-second. What a beautiful trade. That's just so sick. Oh my gosh. These markets just blow me away. Blow me away. These markets blow me away. That's crazy, man. Okay, I'm taking a break. Oh my gosh, dude. Yeah, nine's definitely the highest probability one. I'm getting to the point. I'm getting to the point where I'm realizing 9 is the highest probability one. Oh my gosh, dude. This just gets me hyped, bro. This just gets me so hyped. Like this, this is what I live for, bro. This is so sick. This is so freaking sick. Perfectly 8 projections. Perfectly. No drawdown. This is so sick. In 369 time. This is just beautiful. So, write down 1026 in your notes, guys. Write down 1026. Very important time, bro. 1026. Your market will have been probably at 10 o'clock. Will be expanding, right? Market's probably going to be expanding by 10 o'clock. So 1026 is a very important time because there will often be this continuation play at 1026, which will be just put it in your notes in case it happens. In case it happens ever again, put it in your notes because, these markets, they have a funny way of rhyming. They have a funny way of rhyming in ways that they already have. Put in your notes 1026 and also all the other times I've written down. So there's a few other times. So far all the times that equal 9, so I think from what I've seen, 9 is the highest probability one. 3 and 6 are good, but they're not as good as 9. And 1:53 a.m., that'll often be a soup of the true London Open. 9:36. This was 369, bro. Isn't that crazy? And it was a 9 too, so it wasn't even a 3 or a 6, dude. 9 is higher probability than 3 and 6. I'm realizing 9 is the highest probability one. Okay, so write these times down. 1:53. That's often gonna soup. That's in the middle of the night. That's often gonna soup the London True Session Open. 9:36. Well, that's gonna be a 9. That's often gonna soup. That's often going to be like a soup of like the 7:30 True, so the New York True Open, so 7:30, and then also the 90-minute True Open, which will be 9:22. 10:26 usually continuation play like this first strike. It's also a 9. Then 7:47 a.m. Sometimes that can soup 7:30 and midnight. Sometimes it's like a 2022 model, so pay attention to 7:47. That's also a 9. And then the last one I have written down so far is 11:43, which is also a 9. I don't have any notes about that one, but those are the 5 I have written down so far. But guys, you can't deny how crazy this. This is objective. This is happening objectively. 3-6. The 9s are the highest probability ones. They are. They really are. Man, I'm so hyped right now. So cool, bro. It's so cool. Alright, we should probably move on. So cool. So, what do we look at now? We determined kind of what happened this morning, why market was high resistant. We talked about the propulsion block. We talked about the higher time frame, how's the daily CRT to the downside. We talked about how this fit inside their higher time frame 243 dealing range, how we came up, tapped the 3-minute for value gap here, delivered lower out of it, got expansion to the downside, eventually draw down to our CRT low, which I think was this low right here. Let's look at the 1 hour. I don't even know what else to look at. 1 hour. So, you could make the argument maybe this was like a 30-minute 2022 model, right? Because we did have this. Well, I don't know if this SMT is that great, but maybe we'll just mark it out, right? We had SMT with Monday high and Tuesday high. So this is okay. So this was a previous day high SMT, right? Yeah, previous day high SMT. So this was a sequential SMT actually, and Monday 18 o'clock. So this is very interesting actually. So here's 18. Let's drag this over. So remember the Genesis model from before? You remember what I was saying about it? That this was gonna maybe be a soup right here. Well, you can pretty clearly see why, right? Monday 18 o'clock was the true session open. This was also the Genesis model. See how that actually lined up perfectly? These markets are so beautiful. You can't argue with them. They're objective. They're obvious. They're real. They're unarguable. They're never wrong. They're infallible. They're unfallible. If that's a word, is unfallible a word? Is unfallible a word? Wait. Wait, so is infallible a word too?
Yep, absolutely. Infallible is a word, and actually a pretty common one. It means incapable of making mistakes or being wrong. So, in other words, if something or someone is described as infallible, it's basically considered error-free or flawless. So both unfallible and infallible exist, but infallible is definitely the more commonly used term.
Wait. Why is unfallible a word then?
Yeah, I get the confusion. So unfallible is just a less common way of saying infallible. They pretty much mean the same thing. Incapable of error. It's just that
So they're both words. Okay. All right. Thank you, GPT. Thank you. So these markets are infallible, unfallible, whichever word you want to use. It's that they're infallible. These markets are infallible. Oh my! No shot, bro. No shot. And look what we have at that high. What is this? What is this, dude? What is this? OB? No way, bro. OB? Oh my gosh. You gotta be kidding me. Oh my gosh. OB? OB? Oh, this is crazy. And then what's this? PB. OB, PB. Just insane. And that's on the 30-minute. You might want to mark it out on the 15. What a wow. What a crazy beautiful. Look how perfect it is. It's just perfect. Wow. Can't lie, this is just really cool. No wonder we dumped. But the issue is how do you, like Gary said, it is hard to see this in the moment. What up, Gabe? Alright, so then we had midnight as well. How crazy is this? Midnight? What about 1:30? No way. Oh my gosh, wait. No way. Oh my gosh. Bro. Sorry, we're on some crazy stuff right now. Not on some crazy. I'm looking at some crazy stuff right now is what I'm trying to say. 1:30, okay. Midnight open, True Week open. We have a OB PB. What happens here? 1:30, okay? That's our True London open. Oh boy, things are getting interesting, dude. Things are getting really interesting. Oh my gosh. Okay. 1:30, drop down lower time frame. Then what? What's the 90-minute open? So 1:30 is actually right here. What's the 90-minute open? What is it? $152. So yeah, we were definitely above 152. That is just insane. And then what are the other 22-minute true opens? There's 221. Oh yeah, that's the one that got used. And there's also 243. Oh wait, that. Oh. Oh, whoa. Wait. 243? No way. No way. Oh my gosh. No way. Oh my gosh. What, look at this. 243. This is the 22-minute true open. And then what time does this hit? This hits at 246. 6 plus 6 is 12, which is 3. Not a 9, but still 3. That is just crazy. Now, I'm not saying it'd be easy to catch that. I'm saying is wow. Just wow, bro. It's very cool how precise these markets are. So you, for anyone wondering, like, whoa, this is why we went lower. This is why. Oh my gosh. All the true opens pair up to be a soup of the high. It's pretty cool. My gosh. We gotta lock in. Dude. Now this propulsion block, actually, we dug deep into it. But still. Alright. Such an interesting day. Just fascinating. Maybe just look at this True Week Open one more time. Right? Because that was kind of the whole idea in the first place, is getting rid of the other ones because it might make it a little bit more complicated. The simple way to look at this is 1:30, midnight, and 18 o'clock, right? You only use these three because otherwise it might get too complicated. My point with showing the other stuff is like, yeah, it is that precise, but let's just bring it down to human level, not algorithmic perfection that it is, because it's too complicated. It's too hard for our brains to understand. But you see these three consecutive true opens. Now you see the manipulation, right? Manipulation occurs where? Above all them, right? This is how you identify manipulation. So now that we've identified manipulation correctly, we can observe, okay, New York's probably going to continue and be high resistant. So this is how we can identify high resistant liquidity conditions, by identifying, okay, actually, this was the manipulation probably for the week, right? Ooh. Was there SMT at the high? Nah, but still. So Alright, no one's even watching, guys. I don't even know. I might not be live anymore. I might end the stream. Man, I don't know how I'm the only person in the world that thinks this is cool. Like, this is so cool. Alright, I'm gonna end the stream. Bro. I gotta lock in. I gotta lock in. We have everything we need. I just gotta lock in. Gotta lock in. Okay, I'm gonna keep backtesting, but I'm ending the stream. Peace out, guys.